just your views on the NSE's performance today, KQ being the biggest gainer today?
Yes, KQ did gain, but I think it was mostly driven by, there was quite a bit of foreign participation, and there was one or two big block trades which saw a rise in the price as retailers also came rushing in. But we also saw a lot of foreign investor participation in the market today as they came in to pick up flows and get good bargains. So they really pushed the market today.
Let's talk about the bond markets and how they've performed. I mean, people have been saying there's been some spectacular recovery there.
I wouldn't quite call it spectacular recovery, because if you look at the way the performance from July, actually from the financial year 2010-2011, market performance has actually declined, and going forward, I wouldn't actually say there's quite a lot of positive sentiment, considering if you look at the yield curve, it has actually moved upwards in the last 8 to 12 weeks.
But you know, Kenneth, I mean, just on this one, to belabor the point a little bit, I think you're one of the few lone voices. I mean, there is a growing quorum of voices that says that the bond markets could very easily outstrip equities when you look at the recovery in the last quarter.
Okay, I think being in the market, if you look at market turnovers, comparing, for example, July and the month of August, it's quite clear that market turnover has declined way below the levels we've seen from the beginning of the year. From January up to June, market was, there was sterling performance, but with the new financial year, market turnover has actually gone down, which I think should be a clear indication that the decline has set in. So,
okay, let's talk about other factors that might influence Kenyan bonds. The shilling, boosted by a stronger euro, we're told, but also together with subdued inflation. How attractive does this make bonds when you consider these two variables?
Looking at the shilling, basically we expect it to just to trade sideways for a while and to stay below the psychological level of 81. And inflation levels have also surprisingly remained rather subdued at 3.2. All these factors actually point towards quite a vibrant secondary bonds market. And in fact, not just these factors, all other factors held, looking at the CBR rate, which was held steady at 6%, looking at sentiment that comes from the Monetary Policy Committee, they're all pointing towards a low interest regime at the moment. But what's happening is we've actually on the ground now, traders and investors in the market, what we've seen is a slight upturn in yields across the curve. And this has impacted negatively on sentiment from the investors themselves. Right. Although all the other factors point to a vibrant market. With low yield rates, you'd expect the market to be quite vibrant. But the upturn we've seen in the rates in the past 8 to 12 weeks has left the market jittery.
Okay, what we know is that the focus has been on the 2-year paper that is oversubscribed. Just give us a sense of the average and also the cutoff rates and how they compare.
The 2-year paper began trading on Tuesday, on the 20th. No, actually, value date was on 27th. It began trading on the 28th, and it's ended the week only having traded about 600 million shillings, which is very, very small compared to other primary issues we've seen in the past, where in their first week of trading, trade upwards of 1.5 to 2 billion shillings. Also, the average came in at about 3.6, which is actually good. That was within market, just slightly about 10 basis points above market. But the problem came in where the cutoff was about 120 basis points above market at a level of 4.7%. So what we see here is currently we have 5-year tenor papers in the market that are trading at levels of 4.5%, between 4 and 4.5%. So the people holding those papers are actually underwater at the moment because there's a 2-year paper in the market with which some investors are holding at levels of 4.7 up to levels of about 4%.
All right, let's move
so
on.
This
Let's move over to corporate bonds, HFCK. What are the market's expectation after that one closed?
We expect an oversubscription. Today was the last day. There were a lot of last-minute investors who came in, even banks actually. So with that bond, they expect an oversubscription. And 5 billion in a market that's as liquid as this was not that hard a target to meet.
All right, and then finally, just going forward, we're expecting to see bonds being launched by the Kenyan Railways company and also the City Council of Nairobi. Infrastructure bonds seem to be hot property at the moment. Are you expecting very good performance subscription, and what sort of yield curves are we talking about?
Infrastructure bonds are hot at the moment because the government is really focused on meeting the Vision 2030, which is heavily dependent on upgrading our infrastructure. So looking at the Kenya Railways bond, they're looking to build about a $200 million commuter train. So they're looking at issuing an infrastructure bond. But looking at Kenya Railways governance issues, their books, they would really need strong support from the government. In fact, I would personally think they would need to be secured by the government to raise investor interest. Same thing with the Nairobi City Council that has had issues in the past with their governance and corruption. They would really need to clean up their books and would need to be secured. That bond would need to be secured by the government to raise investor interest.